Hey everyone, welcome back to another stock market closing live stream. Today we are going to be reviewing Palantir earnings. Those begin in actually just about 12 minutes or so here, but may as well get the closing bell together as well. The wonderful thing here is we are just really a day and a half away from the election, which I could not be more excited about, frankly. Mostly because I'm kind of tired of the election's coming. I know there's a lot of excitement around the election coming, and part of that reason is it finally being over. So anyway, we'll see what happens here. Let's evaluate first what happens with artificial intelligence. What happens with the stock market. You know, Nasdaq's down about a quarter. You've got S&P down about a quarter, about 62 basis points on the Dow. Yields down about 6.4 basis points. Nice move down, but honestly, you still have 4.3, which is way too freaking high. Palantir's expectations are that they need to beat about by about 3.8% quarter over quarter. Their last quarter growth was around 7%. Honestly, like one contract could make a big difference here. So they either got a contract or they didn't. Quarter to quarter earnings are extremely volatile, and it's pretty much a YOLO in terms of how to bet. You also have Hims coming up, which I'm a little skeptical about. You know how much of an allocation they might be able to get going into, you know, from insurance companies, but they've been doing pretty decently. Volatility is a little elevated right now. You're at about 120 on the 10-day. Last time we had high volatility on Hims was in the beginning of August during the Japan crisis. We're actually higher than that right now. And then in May, you were a little bit higher as well, actually quite a bit higher. As far as Palantir's volatility, I almost said volatility. It's like turning volatility into Palantir. But anyway, it's actually on the low side. So options might be cheaper going into Palantir earnings here. It's important for AI. We really want to see beats here on contracts. Palantir, in my opinion, is your OG artificial intelligence. I've been saying it for years that AI or not, Palantir is big data. Big data is what we used to call it before we called it AI, and I've been a big fan. I do think the valuation is crazy, so that's probably why volatility is on the lower side, because I don't actually think that markets think this thing could really jump, you know, another 50% or whatever to get to a fib extension level. But, you know, who knows? Crazier things have happened. So obviously we'll cover it, and we'll see what happens here. You've also got ski seasons beginning, which is kind of crazy. You know, you've got, I think a lot of places are opening up more towards the end of this month, but certainly everybody by like the first week of December. But there are some places that are already open this weekend. I think you've got, I think it's a couple places in Colorado, like Breckenridge, and what's the other one called? Kings or something? I can't remember. What's Kingstone or something like that. I can find out. Yeah, it's crazy. It's starting. So kind of exciting. It is Keystone. That's what it is, Keystone. So somebody here in the comments says Palantir minus 20%. Well, if you think Palantir is going to go minus 20%, you could put your money where your mouth is if you wanted to, because volatility is pretty low right now, relative. And if you were going to get that, I would be certain that, well, I mean, I can't make any guarantees, but I would suspect you'll see a very large spike in volatility, and that would actually help your option pricing, just because, you know, volatility seems low. But then again, let me look at what the expected movement is, because the expected movement is different from the historic volatility here. They're already, I mean, markets are expecting a 12% movement, but Palantir just tends to move more than that, up or down. So, you know, I think that's why the volatility actually looks like it's on the lower side. So we'll see. Okay, so yeah, well, you know, this morning I talked about Bitcoin likely going under $68,000. That is exactly what has happened and played out today. You can see it's actually gone pretty much precisely to my 67 300-ish line over here. And we've hit this line twice now on the minute chart. And if you look at Tesla, you've also got a little bit of a lag going into the close over here. You've kind of, you know, I mean, you were green there for a moment, but boy, you've really given up some of it. and now you're down about 2.4%. And you've got Nas down about 31 basis points as well. Mickey D's down, Google's down, Roblox was positive, down again, Meta's down. Nvidia's only up 1.4%. You know, this was another one that was really moving heavy this morning. You were up around 2% on that Dow inclusion, and that's just been given up. So, you know, tough times, tough days, I guess, but let's see what we got. So again, we've got today Palantir earnings, then we've got Wynn earnings, then we've got Hims earnings. I'll be covering them. We'll go through the financials together. And, yeah, take it all from there. Pretty excited about it. Boom, skitty booms. Skitty booms. Boom. All right, so here we go. We've got about 56 seconds to go to the closing bell. Again, actually, look at that. Russell 2000 again, just sitting under 220. You know, it just like always sits under 220, it seems. And you're losing that 67.3 line right now. Even American Express down 1%. Palantir down about 1.3 going into the close here. Let's go ahead and pull up Hims. Let's pull up Wynn. I wouldn't be surprised to see some impact of Macau or from Macau over there. So I'm not too optimistic on the Chinese exposure. But anyway, let's go get the bell.
In this range, it seems okay given where the economic growth numbers seem to be tracking.
I appreciate you, Mike. Thank you. That's Mike Santoli. We'll go red across the board today. Dow, S&P, and NASDAQ are going to be that way with the bell ringing here. I'll see you tomorrow. We got a busy one on Election Day here in the United States into overtime. Morgan and John.
That bell marks the end of regulation. S&P Global ringing the closing bell at the New York Stock Exchange. Ares Capital Corporation doing the honors at the NASDAQ. It was a mixed session on election eve for the sectors. Utilities a big loser, energy a big winner, technology about flat, Dow, S&P, NASDAQ all losing ground, but small caps going out with gains. That's the scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Ford with Morgan Brennan.
We have got such a big hour of earnings results ahead, headlined by Palantir and NXP Semiconductors, along with Wynn, Cleveland Cliffs, and more.
Plus, 2 ways the election could impact your portfolio. Venture capitalist Bradley Tusk weighs in on Silicon Valley's rising influence and how tech and crypto could be affected. And Raymond James policy analyst Ed will be with us to talk about how the White House result and the makeup of Congress could change the market narrative. But as we await today's earnings results, let's bring in Bespoke Investment Group co-founder Paul Hickey and Cobasi editor-in-chief Adam Cobasi. Adam, good to have you. Paul, good to have you. Adam, so markets. The S&P 500, it's hung in there above 5,700. You think that bodes well? We're getting to 6,000?
I think so. I think we're maintaining our call that we're heading to 6,000 before year end. And I think regardless of what happens tomorrow with the election, we're heading higher. I mean, if you look at the data, historically speaking, 83% of election years have had positive returns overall, with around 80% into election day being positive. After election day, it's around 70% positive from there to year end, with an average gain of about 4%. So you put that on where we are now. And
dude, so much of that's already priced in my opinion, though. Like, everybody knows that, so I feel like it's priced in. This idea that, oh yeah, things are gonna go up after the election. Man, usually people don't say that if it's gonna happen. Like, nobody thinks it's gonna happen, and then it happens. But this season, literally everybody's been saying it. So I'm like, all right, this puppy's priced in.
So I think it obviously depends on the results that come in and the reaction, but
Okay, Wynn is out. It's a miss, 1.69 billion versus 173. Q3, you got a miss on operating revenue. Property EBITDAR, I don't know what the heck that is. But Q3 adjusted EPS also misses by almost 13% on Palantir. You had 90 cents of earnings versus adjusted AEPS versus 103. That was expected. So, pretty gnarly miss there. That would be 90 divided by 103. That is a miss of, should be like 13%. Yeah, it's like 12.6%. 12.6% miss. I'm just waiting for the Macau complaints. But then again, some of that might already be priced in. but I'm certain of that. And then operating revenue came in at 607.2 for Las Vegas, divided by 610.4. Las Vegas was within 52 basis points. Las Vegas revenue within 52 BP miss. And then total rev, 1.73 divided by 1.69. Or sorry, the other way around, 1.69 divided by 1.73. It's about a 2.3% miss. 2.3% total miss, suggesting more China. So we'll see about that. Palantir not out yet. Waiting. Hims not out yet. NXP not out yet either. Bitcoin sitting at 67.4. Within the next minute here, we should be getting Palantir. And yeah, I'll take it from there. Let's see here. Any moment now. We're looking for a beat of $703 million in revenue by Palantir. All right, so Palantir guided 699 mil Q3, and market wants 703 mil. Let's see. That's about, roughly 3.8%. Sequential growth. Last quarter was 7%. Need a big contract here. Come on, baby. Okay, it is 105. Here she blows. Hims, total subscribers, minor miss. Palantir, revenue, 725. It's a beat. Beat on forecast. Beat. Oh, that's nice. Beat on profit, too. It's a pretty big. 725.5. That, dang, Palantir's up 8% on that. Look at that. Here it goes. Going back. I was saying this morning, it goes back to 45 if it beats. Let's see if it holds it. $725 million versus 703. 703.7 million. That is a beat of 3%. 3% beat. And then operating profit comes in at 283.6 mil on adjusted EBITDA versus 244. 283.6 divided by 244. That's a 16.2% beat. That's amazing. That's really good. You got to give them it. That is very, very good. Then you've got Q4 forecast at 769 million at midpoint versus 746.5 mil expected. That puts us at 769 divided by 746.5. That puts us at about 3% above expectations. That would also put our growth at 769 divided by 725. Puts us about 7% projected quarter sequential growth, which is really good. And then it means that we just grew 678, 725. We just grew about 7% as well. 7% Q2 to Q3 and 7% Q2 to Q1. They're just consistently growing at 7% quarter over quarter. This is very good. Then you also have their fiscal year guide. They're calling it Unwavering AI Demand. And your fiscal year guide is coming in at 2.805. I'll call it 2.807 divided by 2.745. It's about a 2.25% beat on fiscal year guide for revenue. So that's actually not that big of a guide beat there. And then 1055 divided by 970.5 fiscal year guide. That is about 8.7% fiscal year operating income forecast beat. That's pretty good. Pretty good. I have to give it to them. So Hims, on the other hand, what do we have over here? Their revenue beat. They just had a tiny miss on subscribers. So they came in with 205 mil subs versus 206. However, the revenue beat at 401.6 versus 382.2. What is that? 401.6 divided by 382.2. It's about a 5% beat. That's pretty good. Net new orders kind of missed. You missed by about 5%. Missed on orders by 5% though. But their adjusted EBITDA beat. EBITDA beats at 170, and this is the fiscal year guide. 175.5 divided by 147.5 puts me about 19%. Fiscal year guide beats about 17%. That's pretty good. Pretty good. So beat on Hims, beat there, and then obviously the beat on Palantir, pretty impressive. NXP's not out yet, but yeah, good move there on Palantir. And again, you had that pretty low volatility going into this, so options should really be paying off here. And you're now sitting at about 46.80. It just sort of keeps going. You're up 13% right now. You still don't have NXP out just at the moment, but yeah. Let's see what else we have here. Somebody says they have calls. Good for you. Congratulations. Then let's see here. Okay, very well. Okay, so let me see what time NXP comes out, and then let's get into the Palantir sheets. The freaks in the sheets. Come on. Okay, NXP is supposed to be out at 410. It's supposed to be out. Oh, there it is. It literally is just now coming in. It is a adjusted EPS down year over year. Their revenue roughly matches, and their adjusted EPS beats, and their free cash flow misses a lot. So 593 mil free cash flow versus is 921 expected. That's a miss by a lot. Their, what do we have here? Adjusted EPS at 345 versus 342. And then forecast guide of EPS, big miss. Oh, that's not good. 362 expected. Midpoint is actually $3.10. $3.10 divided by 362. That's about a 14% miss. 14% miss on guide. Wow, that guidance is not good. And then that's for EPS guide. Q4 margin misses. And then you have let's see, 3.10 divided by 3.36. Q4 rev missed by about 7.8. Miss on Q4 revenue. So NXP really got hit here. It seems like hardware is just getting hit more. In software like Palantir, one of my favorites in software, I just think the valuation's nuts. It's doing extremely well. So they do a lot of consumer electronics, autos, entertainment, and networking products. Some wireless infrastructure as well. So it could be heavy on the consumer sort of product side there. So they're getting hit. Whereas Palantir, the big corporate contracts versus like individual seats, doing pretty well. The valuation on Palantir on their fiscal year EPS. Let's see here. Fiscal year. Well, let's see. Adjusted operating profit for the fiscal year is expected to be 105. So let's go find out. Let's see here. Okay. Yeah. Okay, that's pretty much already built in now. Palantir sees operating profit of just over $1 billion. That's already what we have for Q4 now. That's been updated. And that puts you at about 36 cents for earnings. So it's done really well, but I don't know, there just must be a lot of shares or something, but 47.34 divided by 36 cents. The sucker's trading for 131 times earnings. So it's like, you better grow. So at present, just over $1 billion. So I'm going to call it, at present, roughly $1 billion fiscal year forecast. EPS works out to about 36 cents. That means Palantir is trading for, again, what do we have? 47 divided by 36 cents, 130 times earnings. And their growth, I mean, we're doing 7% on the quarter here regularly. So, you know, that's not going to, the EP won't translate to EPS growth directly. But let's give them, I'll give them the 28% growth. At 28% growth, Wall Street only forecasting, Wall Street, by the way, is forecasting less. Wall Street is forecasting on EPS growth 22%. You have, let's see here, 130 divided by 28, 4.64 PEG ratio on 28% growth. And then if I go with 22, 5.9 times 9.0 PEG ratio. The valuation is just nuts. It's you know, this is the stock I'm writing down on my Christmas wish list, because if we go into recession, it sells for $20 again, you know, or even less. Honestly, probably maybe even $10 again in recession, and I want to go shopping bigly. So, but at these valuations, it's a little kooky. Okay, so, and I think we've been at 47 before. Nope, we haven't. We last topped out at 45. So this would be an all-time high place for Palantir. Previous high, 45.14. Currently in post-market at 47. So this would be a new all-time high if it holds. Okay, very well. So let's see, NXP, we already did that. Nothing new on Hims, Wynn. Okay, let's go read the statement on Palantir. Okay. And we'll just stick in the 1 minute here. Okay. All right, let's go here. Somebody says Palantir never sees $10 again. It'll never see $20 again. Be real. You'd be surprised, man. If growth flatlines because you're in a recession at 130 times PE ratio, being real is saying it can collapse substantially. So, you know, if you want to delude yourself, I'm not anti-Palantir. I'm just saying, like, you're delusional if you don't think it can. But that's okay. You know, I'd rather just be blunt and give you a heads up than pretend that was never true because I just wanted to fangirl you. Investor relation. Okay. But, I mean, don't get me wrong. I think it's a fantastic company. Its valuation's nuts, but great company. Okay, so Q3 release. Let's get it. Let's save this. Okay. Palantir. Yeah, everybody said the same thing about Tesla during peak. That it would never go down. Exactly. That's true. That's true. And then, you know, it's down for 3 years in a row, you know, and I think right now it's built up on lofty Elon expectations that unfortunately I think are also a little bit detached from reality, but that's okay. I still love Tesla. I think it's a great company. All right, so let's go into this. Palantir reports revenue growth of 30% year over year. This is good. Raises full year guidance. This is true. AI demand that won't slow down. I believe that for them. So I'm an AI skeptic for like the actual infrastructure portion, but this, I believe Palantir. Oh my gosh, stop it. I believe Palantir. Okay, we absolutely eviscerated this quarter, driven by unrelenting demand. Yeah, but these sort of, like, the phraseology, you know, I hope it can stay this propped up. I hope this type of commentary can stay propped up. Seems aggressive, but hey, they're killing it. So, let them. But, you know, I always think of, like, you know, when growth people are always very cheery when, nothing's ever gonna slow down. Everything's going crazy. This is amazing. This is the difference between the AI haves and have-nots. Go hire us. You know, it sounds a little marketing pitchy. U.S. revenue grew 44% year over year. Commercial revenue, this is very good. We're still getting government growth. This is very good as well. Closed 104 deals at over $1 million. That's great. They used to measure this by 10 million, and now they're measuring it by 1. Fine. Okay, let's see here. Yeah, oh yeah, and they have a fortress balance sheet, by the way. Like every time I look at their balance sheet, I'm like, yeah, you guys got lots of money. It's pretty good. All right, what else do we have here? I want some financials. Really? Is this PDF just gonna suck? Fine. Fine then. I will get it a different way. Fine. Do it in browser here. Raising guide. That was good. This was good. Obviously, they'll have their earnings coming up. See margin. Let's see what we got here. Gross profit grew nicely. That's really good on the profit side. I mean, honestly, I'm just going to go down to income from operations. Oh my gosh, it's an explosion of income. 113 divided by 725. 15.5% income from operations. 39.9 divided by 558. Before it was like 7. I mean, they've almost doubled their income from operations, which is really impressive. Yeah, you can see that over here at net income doubling. But again, look at that. There's so many shares outstanding for this company that it's like, it's a phenomenal company. It's a really good company, an amazing balance sheet, and they print money like crazy. But the problem is there's so many freaking shares outstanding of this sucker that it barely trickles to you. And again, you're paying 131 times for this sucker right now. You have to wait 131 years just to pay back your investment and earnings. Woo! Yeah, balance sheet is still very strong. Sales and marketing up, yeah, it's about a 15% boost there. But, you know, their year-over-year like growth is bigger than that. You're at over 30 to 50%, so it's okay. Obviously, they pay out stock comp. This is great. I mean, honestly, it's a great company. It's just very, very expensive. So I can't poop on it. I mean, the numbers are phenomenal. They deserve it. They deserve it. Okay, let's go look at Hims. Let's go. Hims, investor relations. So somebody says Palantir is a Ponzi. Why do you think that? I don't know. I wouldn't say that. AI mania? Yeah, that's for sure. The greed train on Palantir reminds me when it was $45 3 years ago. I mean, that is true. A lot of dilution between then and now. So, will the market have a lost decade? Maybe. Somebody here says TMDX dropped like 50% in a week. Oh yeah, like stocks can move really fast. And I think people forget about that. Yeah. But that's okay. You know, and I want everybody to make some money in the meantime. It's just always good to have a little reminder. Diversify, diversify. So, like in House Hack, go buy yourself some upside in House Hack, a little startup. So that way, when we IPO, hopefully we can IPO for biglies. No guarantees, obviously. Hims, earnings release. Okay, let me pull up the earnings for Hims. $5. Palantir enables price fixing. Ooh, ouch. Hey man, what's with the allegations? Okay. Okay, let me get this up on Hims. And then let me see if I could just do one more thing here. Do-ba-dee-doo, ba-dee-doo, ba-dee-doo. Do-ba-dee-doo. I'll just take a second. So, for the person who said that Palantir's shares outstanding have been the same for a while, you're wrong. You're definitely wrong. Sorry. But between the second quarter and first quarter, they issued, looks like about 10 million shares. Oh, come on. Which, keep in mind, 10 million shares is like $500 million, right? And they issued that in a quarter. Palantir is like a $93 billion company, though. So, again, you know, the valuation's up there for the actual EPS that they have. But if I look at their growth of shares on, let's see here. Or shares outstanding. If I look at their gap shares outstanding from 22 to 23, 22 to 23, there were 4.7% shares created. The year before that, there were 3.5% shares created. The year before that, there were 9% shares created. So they're definitely issuing shares. A lot of it might just be, you know, to pay for stock comp, but you know, it's still getting paid out. So, you know, keep that in mind. Those are big numbers. Okie dokie. Revenue up 77% year over year in Q3. Let me just look at the Hims financials. That's what I like. So what makes me, I know their quarter over quarter orders went down, or their forecast went down, which wasn't great for orders. But let's just look at the rev that they've got here. So their gross margin is fantastic at 79 cents. Big fan of this. This revenue explosion is also very impressive. I mean, you've almost doubled revenue. You have almost doubled marketing, but not as much. You know, you're probably closer to like 60% there, just mental math. And you're profitable now, which you weren't profitable last year. So that's a big deal for a company. Good job. Now you got 35 cents of earnings here, call it 32 diluted. And if I look at cash flow, let's see. Investing, where's operating? There it is. $164 million of operating income. Plant, property, and equipment only 17. So you get like 150 million of cash flow generation in 9 months. I've got current liabilities that are very low. Actually, total liabilities are like nothing. They could literally pay off all of their debts with the cash they have. The balance sheet's very good here. Very good balance sheet at Hims. And let me look at the valuation for them. So they just generated about 32 cents of earnings in a quarter. So that should put us around $1.30 for the year. But obviously there's going to be some lumpiness in that. So let's see what Wall Street forecasts. They're only forecasting 67 cents for this year and 86 for next. So I don't know if this is just like they just recognize more income in this particular quarter for some reason. But that would take a little bit of research to understand what's going on with the lumpiness. Let me see what the quarterly earnings have been. Oh yeah, the last earnings were a lot lower. So this is the third quarter. Last year, Q3 was 32 cents. Q4 went down to 22 cents. And before that was 6 cents. Q1 is expected to be 16 cents. 17 cents in Q2. 19 cents thereafter. So I don't know, something happened in Q3 where they got like this really big boost that I guess Wall Street doesn't think is going to last. But, I mean, if you had 32 cents of earnings, and this stock is, what are we going for here? You're trading for about 22 bucks. Still trading for about 68 times. And their earnings might, in the future, really flatten out, or the current projections. So they're expected to grow, probably about 18% a year, just off the top of my head, kind of dividing that. It's trading for about a 3-1 peg. And that's using 32 cents. Sorry, not 32. Well, hold on a sec. Actually, no, wait. Hold on a sec. Oops, I did that wrong. If I use 67 cents, that's more appropriate. Ah, that's actually a big difference. Because if I use 67 cents for the whole fiscal year, I'm trading for about 33 times earnings. I'm expected to grow for by about 18. It's not bad, actually. It's only a 1.82. And if their earnings are going to be higher, if this isn't lumpy and their earnings are actually going to be higher, valuation on Hims actually isn't that bad. It might be worth listening to their earnings call to kind of see what's going on there. It's not bad at all. So, okay, very good. All right, good. So, what else do we have here? When can I invest in House Hike if I'm not accredited? Somebody says. TBD. You know, those things take a while to figure out. So stay tuned. Somebody says Dell is undervalued. Yeah, I don't know about that. I know you think they might pick up a lot from Supermicro, but if the whole thing slows down, you're gonna have a problem. So not the biggest fan of that. I was never a Palantir bear with Russ Gerber. Thank you for saying something that's not true. I actually rode Palantir up for a while, but then the valuation got a little stretched and it was too much for me. So I took profits on Palantir. Yeah. Okay. Very well. So that is. I want to see if there's anything specific really in the quarter there. Oh, right. Their GLP subscriptions are really affecting timing here. And so they're trying to... That might affect their future revenue a lot, which... That makes it harder to value them. So you really got to understand if you're just getting like a one-time boost in these GLP subscriptions, or if you're going to be able to keep this going. That's a toughie. Anyway. All right, that's that. So thanks so much for watching this. Consider investing in HouseHack by going over to househack.com, and we'll see you all in the next one. Goodbye and good luck out there.